Hey, Stock Explorers listeners, and welcome back to another deep dive. Today, we are taking a look at Celsius Holdings, the company behind those Celsius energy drinks.
Oh, yeah,
You've probably seen them. I mean, they're stuff
absolutely.
everywhere these days.
Yeah, they're hard to miss, that's for sure.
They're doing something really interesting. We're going to figure out what it is.
Yeah, it really is remarkable how they're thriving. I mean, you think about this market energy drinks, it's cutthroat out there.
It is,
You got your Red Bulls, your Monsters, these are giants.
right?
And yet here comes Celsius holding their own and then some.
So let's unpack this a bit. Celsius calls themselves a better-for-you functional beverage.
Yeah,
Not your typical sugary energy drink. But
okay.
what does that even mean?
Yeah, that's the question, isn't it? I mean, everyone's trying to be healthy these days, right?
Right? Like anyone can slap a healthy label on something.
Exactly. And that's what's interesting with Celsius is they've kind of gone beyond just the marketing. I mean, yeah, live fit, tagline, and clever, sure. Yeah. But they're also backing it up with the ingredients, and a strategy that actually seems to be resonating with consumers and, increasingly health-conscious consumers.
So they're tapping into a trend for sure, but they're also doing something different. What evidence do we have that this is actually working?
Well, I think the numbers speak for themselves. I mean, despite all the challenges that the consumer packaged goods sector faced in 2024, Celsius saw a 22% jump in volume growth year over year.
That's pretty big.
Yeah, that's massive. And get this, they're currently the #3 energy drink brand in the U.S.,
Wow.
holding almost 12% of the market share.
12%, that's a serious chunk, especially considering how established those other brands are.
It is.
But here's what I find really interesting. Celsius actually contributed 30% to the overall category growth in 2024.
Oh, wow.
That tells me they're not just stealing customers from the big guys.
Right.
They're bringing new people into the energy drink market.
Exactly. They're expanding the market itself, appealing to a segment that might have previously just completely avoided energy drinks altogether.
Yeah, they didn't even want to touch them before, and
Now they're like,
yeah, Celsius is different.
yeah, exactly. And this is where their profitability story becomes even more interesting.
Ooh, okay, let's talk money because impressive market share is one thing, but are they actually turning that into cold, hard cash?
They are, and remarkably so. Celsius is boasting a gross margin of over 50%,
Okay.
which is significantly higher than many of its competitors. And this points to a few things, efficient operations, smart pricing, and a product that people are willing to pay a premium for.
They know they've got something good.
They know they've got something and they're charging for it. And in 2024, they reported $145 million in net income and an adjusted EBITDA of $256 million.
Those are not rookie numbers.
Those are not rookie numbers, no.
So that's got to be at least part of the reason why they've become such an attractive target for acquisitions.
Oh, for sure.
Speaking of which, let's dive into the big one.
Okay.
Alani Nu, earlier this year, Celsius announced plans to buy them for a cool $1.8 billion.
Yeah, this move definitely sent ripples through the beverage industry. I mean, Alani Nu, like Celsius, has been a rising star in this better-for-you space, but with a particularly strong following among women.
So is this just about getting bigger, or is there a deeper strategic play here?
Size matters, but it's not the whole story. What's really intriguing here is the strategic alignment. I mean, both brands are targeting that same health-conscious consumer, but they each bring their own strengths and their own audience to the table.
So they're not just doubling down on a single market segment, they're diversifying their reach within it.
Precisely. They can leverage each other's distribution channels and marketing expertise, product development, to become a powerhouse in this functional beverage space.
It's a smart move if they can pull it off.
It is a smart move if they can pull it off, but, integrating two companies, especially ones with distinct cultures, can be tricky.
You've hit on a crucial point. I mean, we've seen this time and time again. Acquisitions fail because of those integration challenges. It's not as simple as just like, adding 1 plus 1.
No, it's not a simple equation.
No, it's definitely not. And this is where Celsius acquisition of Big Beverages, I think, becomes really relevant.
Interesting.
That acquisition wasn't about grabbing market share. It was about strengthening their innovation, their R&D, and their supply chain capabilities.
So they were laying the groundwork for something bigger.
They were building the infrastructure to handle not just organic growth, but also potential acquisitions like Alani Nu. It's like they had a plan all along.
That's a very astute observation. They were strategically setting themselves up for a move like this, and this focus on building a solid foundation. This is essential for long-term sustainable growth.
This brings us to another important aspect. Financing Celsius is using a mix of cash and stock to acquire Alani Nu, and issuing new shares to fund part of the acquisition brings up the topic of stock dilution,
Right.
which could be a concern for existing shareholders.
You're right. Stock dilution is something investors always need to consider, in essence, when a company issues new shares. It's like slicing that ownership pie into more pieces. Each existing share represents a slightly smaller portion of the company. But it's not as straightforward as just saying dilution is bad.
Right.
It really depends on what the company is doing with this, influx of capital.
It's a trade-off, right? If those newly issued shares are being used to, fuel smart acquisitions or fund growth initiatives that generate significant returns, then the dilution might be worth it in the long run. It's like planting seeds for a bigger harvest later on. But if the money isn't being used wisely, then dilution can certainly hurt those existing shareholders.
Exactly. It all comes down to execution and whether the company can deliver on those promises. And with Celsius, they're not just relying on acquisitions for growth.
Right.
They have a multi-pronged approach, which is encouraging.
Let's dig into that. What are some of the key pillars of their growth strategy?
Well, they're laser focused on attracting new consumers. That means expanding distribution channels, getting Celsius into more stores, gyms, even online platforms.
Makes sense.
And of course, raising brand awareness is crucial. They've been investing heavily in marketing sponsorships, influencer campaigns, just to get the word out.
So it's not just about being on the shelves, it's about being top of mind when consumers are looking for that energy boost.
Precisely. And they're not just trying to get people to try Celsius once they want to turn it into a daily habit. That's their second big focus, increasing that consumption frequency.
Got it.
They're doing this by positioning Celsius as a versatile beverage, something you can have pre-workout during your workday, or even as a healthier alternative to a sugary soda.
So they're trying to break out of that niche workout drink image and become more integrated into people's everyday lives. I'm curious, though, how are they navigating the potential pitfalls of the energy drink market? I mean, this category has faced its fair share of scrutiny over the years.
Yeah, you're right. There's a lot of baggage associated with traditional energy drinks.
Yeah,
High sugar content, artificial ingredients, those crash effects.
right.
But Celsius seems to be doing a good job of distancing themselves from those negative perceptions. They're constantly emphasizing their better for you angle, highlighting the use of natural ingredients in their commitment to providing sustained energy without the jitters or the crash.
That's clever, but it's one thing to say you're healthy. It's another to actually be perceived that way. Is that image sustainable, especially as they get bigger and potentially acquire brands that might not have the same clean reputation?
That's the challenge, isn't it?
Yeah.
Maintaining that authenticity as you scale. It'll be interesting to see how they navigate that, particularly with the Alani Nu acquisition. I mean, Alani Nu does have a strong, clean image as well.
Right.
So that alignment is promising.
Okay.
But future acquisitions could test that commitment. And of course, the competitive landscape is constantly evolving.
Right. The big players aren't just standing still. We've seen brands like Monster and Red Bull introduce their own lower sugar options and even branch out into new categories like sparkling waters. How can Celsius stay ahead of the curve?
Innovation is key. They're already expanding beyond their core energy drink with new product lines like Celsius Essentials, which focuses on hydration and wellness,
Okay.
and Celsius Hydration, a line of zero-sugar electrolyte-infused sports drinks. This shows that they're not afraid to experiment and cater to those, evolving consumer preferences.
So they're diversifying their product portfolio while still staying true to their core values, but let's not forget about their global ambitions.
Right.
In 2024, they expanded into 6 new countries. That's a bold move, considering they're still relatively young as a company.
It certainly is ambitious, and global expansion can be incredibly complex. Different regulations, cultural nuances, establishing those distribution networks in new territories. It's a whole different ballgame.
It's a lot to juggle. They're trying to maintain this better-for-you image, compete with these giants who are also adapting, innovate with new products, all while expanding globally. That's a lot of balls in the air. What do you think? Is Celsius spreading itself too thin?
That's the million-dollar question, isn't it? It's a risky strategy, no doubt, but they've demonstrated a remarkable ability to execute so far, and remember, their financial performance is strong.
It is.
They have the resources to invest in these initiatives, but it will be fascinating if they can maintain this momentum.
So is Celsius Holdings a company you'd bet on? Are they building a lasting legacy, or are they flying too close to the sun?
Well, that's something you'll have to decide for yourself.
Of course.
But here's what I find most compelling about their story. And not just selling a drink, they're selling a lifestyle, and that can be incredibly powerful.
Absolutely.
But it also comes with a responsibility to live up to those values, to stay true to that message, and to avoid becoming just another marketing gimmick.
Yeah, it's a tightrope walk for sure. And as Stock Explorers listeners, I think we're all eager to see how this unfolds.
Absolutely. Celsius is a company that demands attention. They're disrupting a market, challenging conventions and forcing everyone to rethink what an energy drink can be.
This deep dive has definitely given me a lot to think about. I'm curious, what's your biggest takeaway from Celsius's story so far?
You know what strikes me most is their audacity. They're not afraid to take risks, to make big moves, to challenge the status quo. And that's refreshing in a world where so many companies seem to play it safe.
I agree. They're not just riding a trend, they're shaping it, and that's what makes them so fascinating to watch. But as with any ambitious company, there are questions that linger.
Oh, yeah, for sure. Can they successfully integrate these acquisitions and create a cohesive brand identity?
Right.
Can they maintain that better for you image as they grow and face increasing competition? And can they navigate the complexities of global expansion without losing sight of their core values? These are the questions that will define their future.
And as investors and consumers, we have a front row seat to this unfolding story. So what can our listeners do if they want to keep exploring Celsius Holdings?
Stay informed, stay curious, and stay engaged. Follow their financial performance, pay attention to their marketing campaigns, try their new products. This is a company that's constantly evolving, so keeping your finger on the pulse is essential.
Well said. And if this deep dive has sparked your interest, don't forget to subscribe to Stock Explorers for more insightful analysis of companies that are changing the game.
Turn on those notifications so you don't miss an episode, and give this one a, if you found it valuable, we always appreciate your support.
And most importantly, keep exploring, keep questioning, and keep investing in your knowledge. Until next time, happy investing.